All right, guys, welcome back. We're going to get right into the stock charts. So most of you that's been following this channel for a while know that I've been a bear. And let me show you why I've been a bear, just so everyone can understand my bigger picture outlook. Purple line right here that runs up on the S&P 500. We're looking at the SPY. That's the S&P 500 ETF. And this is a weekly chart. So this shows going back to 2009, the bull market that we were in for the last 12 years. And you can see that we were holding this trend, reaction here, reaction, reaction. We held this trend for a while. And in 2018, we broke this trend. And now what we're seeing is more conducive of topping action, where the big major bull market trend is volatile. You can see right here we broke that uptrend, and then we were back testing all of 2019. Let me take this blue line away. We did a perfect back test here, and that's exactly where we failed and rolled over. We then had a kickback rally here, and this is more conducive of topping action. You can see that the price action is sideways. It's getting, it's volatile. It's down, it's up, it's down, it's up. And this is not what a bull market looks like. A bull market, you'll see price action where it works its way higher, not as much volatility, and you just work your way higher in a bull market. When you start to get into a transitional period, you start to see high levels of volatility, which is what this looks like, where it's just going all over the place. And then, so I expect this is a pivot point for the bull market. So I look at this as we broke the bull market back here in 2018. And all of this action is just the transitional period when we're transitioning from the bull to the bear market. Now, of course, I could be wrong, but my outlook and my videos are bigger picture. When I say that we're in a bull market, I'm not looking at this just last rally right here, this impulsive, rally that we've had up. What I'm looking at is, taking into consideration this entire picture that's lasted a decade. So it comes down to, the fact that this trend that was a decade-long trend was broken. We did a perfect back test, a failure. This is a kickback rally, and I now expect this to roll over. My picture hasn't changed. However, we need to see a reversal. So that's what we're starting to see today. So let's look at the 1 hour here on the S&P 500 and look at that. And this is a bearish rising wedge. On the downside, you could mark it out right here if you'd like. But I'm just going to go from the bottom. So we only have a couple reactions, 1 and 2. It's not quite clean enough. If I move it up like this, I get a few more reactions. So maybe that's where it's at. We could say that is pretty clean. And yeah, in fact, I'll leave it right there. So there's your bearish rising wedge, reactions on the top. And look, we overshot this. And this is what I was saying. When you have a bearish pattern, a lot of the times what they'll do is rather than just break down, they'll gap it down, but they overshot it as a way to run stops. Anybody that was looking at this big bearish pattern was looking for a short trade. They were looking for the bearish price action. And if they got in too early, then it was, they pop it to the top and stop everyone out. Then that was instantly followed by a pop to the bottom. This creates a island top reversal, or a cluster island top. This is a classic reversal pattern, which is put in play. So now, basically, this is a short trade. I am short again, and this is because we have this island top reversal pattern. And so now the way you play this is, if they want to run the stops, they're going to pop it up to the highs here. So they'll run it up here, briefly pop the highs, run some stops that took this island top reversal, and then that would usually be it. That's about as much as you'd want to see. So any kind of pop above here should be fleeting, and it should fail. If it doesn't, then that kind of voids out this island top reversal. But as of right now, the information that we've got a bull trap, we have a gap down, we have gap down and continuing to sell off, trapping in the bullish money with that gap down. And we have a break of this big bearish rising wedge pattern, which is the pattern that was in play for this entire rally going back to the March lows. and we now have a break. We have an impulsive break too because it came with a gap. Gaps are impulsive, and that's what we have. So that is bearish. We're looking for this to continue to roll over now, and we'll look for some support levels. There should be some supports around. I see some support right here at it's about 300 up to 302, somewhere right in there. So we probably, that's where, if there's going to be buyers, they might step in right there, but I think we're going to roll over till we hit that first level of support. Triple Qs broke this most recent uptrend. We have a little bit of support right down here at this 240 level, but given the nature of the S&P 500, I think the Triple Qs will probably break this, and it broke this most recent level of support as well. Okay, XLV, moving on to this one. All right, so I'm short this again. So far, decently profitable. Gap down to right here. And basically what we see is we overshot the high of this level. So we made a kind of a high up in this area. We had this uptrend line. We broke it with the gap down and impulsively selling down. So we're at a little bit of a support level right here. Could see some sort of a flagging pattern or consolidation, but ultimately the target now is easily 96.90, and then we'll look for a break. So with this trade, it's really about running it down to this 96.90, taking a little bit off there, and then waiting for the breakdown below that level. So that is support. It's about 97 bucks. XLF looked weak yesterday when the rest of the market was rallying, and I pointed out the fact that only tech was really rallying, and so today we get more follow-through, down 5%, and so that looks weak in general for financials. Walmart is showing a little bit of strength today, and this is what I pointed out in this short trade, is how I didn't like how it undercut this and then recovered. Walmart just continues to not be able to break this 121 level. I mean, it broke it briefly here, and it still does not continue to want to break it. So have to watch this. It just continues to kind of consolidate in this area. There's nothing wrong with the trade, but it's just not breaking down. And today it's showing relative strength. So that also doesn't bode well for the short trade. So I'm kind of watching this one closely. Here's TVIX. This is what I'm pointing out, but I didn't get an opportunity to get in on this one because they gapped it higher. And like I said, usually when there's a level that everybody's watching, they don't give you a nice opportunity to get in. So with TVIX, you would have had to take it yesterday, closing right at this resistance level right here. And then it gapped up 20% today. So that's a nice gain for anybody that did take that. I was looking for some sort of recovery, kind of muddle around in this area, maybe back test, and then move higher, but didn't get that. So for me, this could be obviously the start of the next large move in volatility. But what I want to wait for and watch for is how the markets close today. Even though, going back to the SPY real quick, even though we've got a gap down and a move lower, the day's not over, and we could easily see some sort of buying come in and fill the gap. That's completely possible. So I'm putting this video out here in the morning with the understanding that the day's not over. We need to see a daily close, keeping this bearish formation intact before we call it a great trade for the bears. So it's just something that I want to point out. Here's IWM, the small caps, still holding their uptrend in general. Looks like it's just making another test of that support line. Right now it's down there a ways, and it's got to go probably another 5-6%, but you can see lots of reactions down here, reaction. So maybe we're running down to make another test of that. In general, this is not broken or anything, but we'll have to just continue to watch that. Here's this DraftKings one I've been eyeballing, looking for. And, here's your nice clean uptrend here on DraftKings. We broke it today, not that impulsively, though. I mean, it was a gap down, so, you know, that's great. But what I was looking for is kind of a gap down and then a continuation of the down move. So now what I'm waiting for is a back test. I want to see how this thing's going to close. Does it run up and back test and then fail and then start to roll over? I need to see something like that, that it's rejected when it gets up to its resistance line. If it regains support, which it could easily do, then this is kind of a no trade. So this one's probably going to have to wait till the end of the day to understand what it's going to do before jumping the gun on this. Here's Apple. It's not selling off that impulsively. Again, these large cap tech stocks are the ones that everybody loves, and they love to buy it on weakness. So it's understandable that when it gets the first sign of any weakness, you know, the buyers are looking to buy. But so today I don't expect, you know, the huge move for Apple, but, you know, maybe that comes tomorrow when when the weakness continues. But as of right now, just you know, slightly lower. I don't see anything major with that. And then Microsoft, you know, you have a nice gap down and you're starting to sell off here. So that looks nice and impulsive. But we've got some support structure down here. So maybe we move down to this 187, 186 level sometime today. And then we'll have to see, does it hold there or does it break? You know, if Apple and Microsoft don't break their support lines, the rest of the market is going to have a hard time continuing this down move. So that's something to take note of. Okay, so just to reiterate, you know, here's your uptrend in the S&P 500. This is just looking at the short term. And this is, you know, a lot of bulls say the trend is your friend. Well, okay, that's fine. The trend is no longer your friend because we broke the uptrend. It's right here. We were breaking to the upside there and gap down and impulsively selling off. So that trend is now broken. Can we hold, you know, in the concept of the bigger picture, can we hold the uptrend? Yes. You know, here's kind of the most recent low right down here. So we could, if we set in a lower or a higher low than this area, than 276, then yeah, you could still say the uptrend is intact. But this most recent pattern that has been forming and in play for the entire rally is now broken to the downside. So we'll need to wait and see if there's continuation. But one of the reasons why I don't like to wait till you set in a brand new trend based on higher lows and you know, or setting in a new level down here, a new lower low, is that by the time you realize that this trend is broken, you're down, you know, that's 10% to the downside and possibly lower. So what I prefer is wait for these bearish, for the pattern that it's been creating over the last few months to break, and then take the short there and then just manage the trade. You know, it can still go against you, but it's a high probability trade now to the short side because you have a broken pattern. So that's all I got, guys. Thanks for the time. Leave me a thumbs up and a comment. Catch you on the next video.